Hi, this is Zach from Zach's Traders Cafe with a look at the major markets on Thursday, the 26th of May. Starting off with the FTSE 100, and momentum is gathering to the upside with a break of RSI 50. Start the week to leave it at 56, just above the neutral level. Also above the 50-day moving average at 62.05. The end of day close above the 200-day line for Tuesday. The trigger that we've been waiting for, either a break of 60.50 or the 50-day line. And it broke to the upside, 6,600 at the top of the channel from January, and that's the target we're looking at, especially while there's no break back below the 200-day moving average, currently around 61.55. Onto the DAX, and similar story as far as the recovery that we've seen for the indices this week. Not quite sure what the fundamental basis was. I suppose the Greek bailout, a decent cue for the German index. Gap through the 200-day moving average this week. Very, very bullish indeed, surprisingly bullish. And really the view at the moment, while there's no end of day close back below the 200-day moving average 10,116, we would expect an acceleration to the upside and a minimum retest of that 10,474 April peak. After that, for the end of June, up to as high as 11,000. RSI 59, so still plenty of gas in the tank for the bulls, and really only back below the 50-day average 99.85, even questioning the bull argument here. On to the US markets, and for the Dow, bounced off the neckline support there, closed above the 50-day moving average 17,719 earlier this week, and pushing on ahead now. May resistance 17,919, and really end of day close above that, and we should see quite a decent acceleration here to the upside. Looking at progression within a rising trend channel from January, 18,800 looks to be on the cards for this market over the next few weeks. RSI at 56 are just getting started here, and the ideal scenario is that there's not even an end of day close back below the 50-day line. Onto the S&P, and here we had that bear trap rebound from below 2033, the April floor, and we've shot up ever since, well above the 50-day moving average 2063, looking as high as 2200. RSI 59, so plenty of momentum can still come from that type of indicator. Going on to the Nasdaq, and the break of the 4300, 4420 range continues apace. 4429 is the 50-day average, and while above that, looking for a minimum retest of 4574, last month's resistance. Best case scenario target over the course of June up to 4800, and only really back below, let's say, the 10-day average 4366, questioning the upside scenario. Onto the currencies, and and cable really factoring in a walkover for Remain. Obviously, everyone has come in favour of that, and who are we to go against such wisdom? January trend channel there, 150 is the target there on that. We're just approaching that 147.70 May peak, and end of day close above that, and above the 200-day moving average at 147.74 should give us the 151 plus area over the next couple of weeks. Really looking strong here for cable. On to the euro, and so far bouncing at least in a limited way towards the where it should have bounced, floor of this rising trend channel from November. Although obviously this does look like a top, a sort of a buying climax that we had at the beginning of May. Initial support here is around the 200-day line, towards the 200-day line at 111.02, and while there's no end of day close back above that, one could still be at least buying on dips to target the 50-day moving average area at 113.12. But a weekly close back below the 200-day line would finally put the idea of any further strength out the window. Onto dollar yen, slightly surprising really with the overall tone, again bullish for the equities this morning. Dollar yen off a bit, what's that, down about a quarter of a yen, but still trying to consolidate around the 50-day moving average. The blue line there around current levels. probably the line in the sand here, the best one, 108.63, which is the 20-day moving average. Above that, we're still looking for a possible breakout. Below that would then suggest continuation of the breakdown since the beginning of the year. RSI at 53, so that is actually pointing us towards a break to the upside rather than a break to the downside, especially as we've had a rebound off neutral 50. There is an RSI resistance line there at current levels, so if you're cautious, probably wait for either 110 20 plus or back below the 108.63 20-day moving average feature. Finishing off with gold, and snapped neckline support at 1240 quite heavily, but hasn't actually pushed that much lower since. Probably going to try and go for the 1209 or 1208 area, which was this late March support first, and maybe it's wise not to get too pessimistic about this market unless that breaks. We have this broken extended RSI uptrend line here earlier, or last week rather, which was broken, which suggests a big move to the downside. But 1208 initially, and only after that would we be looking or fearing 1162 at the 200-day moving average. That's it for me. More updates at the same time tomorrow.